Multipolarity has emerged as a significant theme in global politics, reflecting a shift from a unipolar world dominated by the United States to a more balanced distribution of power among various nations. This transition is exemplified by the rise of the BRICS Plus bloc, which includes Brazil, Russia, India, China, and South Africa, along with other emerging economies. The significance of multipolarity lies in its potential to foster a more equitable international order, where diverse voices and interests are acknowledged. The BRICS Plus coalition is particularly noteworthy as it challenges the dominance of the US dollar, promoting alternative currencies and trade mechanisms that could reshape the global economy. This shift may lead to reduced reliance on the dollar, impacting its value and the overall economic landscape. As we delve deeper into the BRICS Plus association, it is essential to explore the positive developments it brings, including enhanced cooperation, investment opportunities, and a more inclusive approach to global governance. Multipolarity refers to a global power structure where multiple nations hold significant influence, contrasting with a unipolar system dominated by a single superpower. This shift in power dynamics has profound implications, as it encourages a more balanced approach to international relations, fostering cooperation among diverse nations. The push for multipolarity is driven by the desire for peace, prosperity, and coexistence, as countries seek to address global challenges collectively, rather than through the lens of unilateral actions. However, this transition is not without its challenges. Powerful states often pursue self-interest, which can lead to tensions and conflicts that undermine the principles of multipolarity. The competition for resources, influence, and strategic advantages can create friction among nations, complicating efforts to establish a harmonious global order. Ultimately, the quest for multipolarity reflects a growing recognition that collaborative approaches are essential for addressing the complex issues facing humanity in an increasingly interconnected world. Recent developments within the BRICS Plus bloc have showcased its growing influence and commitment to addressing critical global challenges. One notable achievement is the approval of $1 billion in financing for South African water infrastructure, which aims to enhance access to clean water and improve living conditions for millions. This initiative underscores the BRICS Plus focus on sustainable development and infrastructure investment, vital for fostering economic growth in member countries. The New Development Bank, NDB, plays a significant role in this context, providing financial resources and facilitating projects that align with the developmental goals of its members. Additionally, the NDB has introduced a separate application process for non-BRICS countries, allowing them to access funding and participate in projects that promote regional cooperation and development. This inclusive approach not only strengthens the BRICS Plus bloc, but also enhances its capacity to address global issues collaboratively, paving the way for a more interconnected and prosperous future. The New Development Bank, NDB, plays a pivotal role in supporting developing nations by focusing on infrastructure and essential services that are crucial for economic growth and social development. By financing projects in sectors such as transportation, energy, and water supply, the NDB helps to address the pressing needs of member countries, fostering sustainable development. One of the bank's key advantages is its ability to lend in local currencies, which mitigates the risks associated with exchange rate fluctuations and reduces the financial burden on borrowing nations. This approach not only enhances financial stability, but also promotes economic sovereignty. Furthermore, the NDB is strategically working to expand its membership among Global South countries, recognizing the importance of inclusivity in addressing global challenges. By inviting more nations to join, the bank aims to strengthen its capacity to finance diverse projects, ultimately contributing to a more equitable and resilient global economy that benefits developing nations. The New Development Bank, NDB, contrasts sharply with the International Monetary Fund, IMF, and the World Bank, particularly regarding the conditionality associated with their financial assistance. The IMF and World Bank often impose strict conditions on their loans, requiring countries to implement specific economic policies that can lead to austerity measures, privatization, and cuts in social spending. For instance, during financial crises, these institutions have enforced policies that prioritize debt repayment over essential services, resulting in increased poverty and social unrest in affected nations. In contrast, The NDB offers non-conditional financing, appealing to countries seeking more flexible and supportive financial solutions. This approach allows member nations to prioritize their development needs without the fear of punitive measures or harmful policy mandates. By focusing on infrastructure and essential services without imposing stringent conditions, the NDB provides a more collaborative and empowering alternative for developing countries, fostering sustainable growth and development tailored to their unique contexts. The influence of the International Monetary Fund, IMF, on national policies can be seen through various practical examples that illustrate the often detrimental effects of its conditionality. In Ukraine, the IMF pressured the government to implement anti-worker laws as part of its financial assistance package, leading to weakened labor rights and reduced protections for workers. These measures sparked widespread protests and social unrest, highlighting the adverse impact on the workforce. Similarly, Sri Lanka's experience with IMF coercion regarding tax policies serves as another example. The IMF insisted on tax reforms that favored large corporations while burdening the lower and middle classes, exacerbating economic inequality. Such policies have led to significant public discontent and economic instability. The negative consequences of these IMF-imposed measures often manifest in local economies through increased poverty, reduced social services, and heightened social tensions, raising questions about the long-term sustainability and fairness of the IMF's approach to economic stabilization. The growing popularity of the BRICS Plus bloc and its financial institution, the New Development Bank, NDB, reflects a significant shift in the global financial landscape. Unlike traditional institutions, the NDB emphasizes improving infrastructure and essential services without imposing detrimental requirements on borrowing nations. This approach resonates with many countries seeking development assistance, as it prioritizes their unique needs and fosters sustainable growth. The initiatives undertaken by BRICS Plus hold the potential to create a fairer, multipolar world, where emerging economies can collaborate and support one another, reducing reliance on Western-dominated financial systems. As these nations work together to address common challenges, they can cultivate a more equitable global order that empowers developing countries. For emerging economies seeking financial support, the BRICS Plus framework offers an appealing alternative, providing access to funding that aligns with their developmental goals while promoting economic sovereignty and resilience. This shift not only enhances their bargaining power, but also encourages a more inclusive approach to global economic governance. In summary, this video highlights the critical importance of multipolarity in reshaping global power dynamics, with the BRICS Plus bloc playing a pivotal role in this transition. By fostering collaboration among emerging economies, BRICS Plus aims to create a more balanced international order that prioritizes the needs of its member nations. The discussion emphasizes the benefits of the New Development Bank, which provides essential financing for infrastructure projects without imposing detrimental conditions, thereby empowering countries to pursue their developmental goals. As viewers reflect on these key points, it becomes evident that the BRICS Plus initiatives offer a promising alternative to traditional financial institutions. We encourage you to subscribe, like, and share this video to stay updated on further insights into global economic trends and the evolving landscape of international relations. Your engagement helps us continue to provide valuable content that informs and inspires discussions about the future of our interconnected world.